Welcome back. Harmful to the American people. That is the rationale behind the Justice Department's lawsuit blocking AT&T's takeover of Time Warner. The government says that the mega merger would squeeze out competition in the media landscape and cause consumers to pay more for phone service, internet service, streaming, as well as cable TV. Joining us right now is SkyBridge Capital Senior Portfolio Manager Troy Gayeski. Troy, good to see you. Thanks so much for joining us.
Yep.
What do you think about this?
Well, yeah, it's come as a big shock to the hedge fund community. If you talk to managers focused on merger arbitrage several months ago, that was their highest conviction position because no one saw the Justice Department get involved in a vertical merger. But the thing that we've always tried to remind people of is, remember, Trump ran as a populist, right? And regardless if you agree on the merits, it's good politics, right? Potentially blocking a vertical integration that could lead to more consolidation, as you had with Comcast and NBC Universal, makes sense from a political standpoint. Whether they can actually get a judge to agree is really the question.
He said this on the campaign trail, remember? He said, I'm not going to let this deal go through.
Right. So it was telegraphed, but it was as if some people in the investment community weren't really listening to the president. Yeah. And one of the arguments that the Justice Department uses in its lawsuit is that AT&T and DirecTV have both acknowledged in public filings and in internal documents that, quote, video distributors that own popular programming have the power and the incentive to harm competition.
Yeah.
And so that goes to the root of why you would file an antitrust suit.
Of their case, right? I mean, look, the big picture here is distribution companies are in much weaker footing than they've been years ago, right? And content, as we've talked about at SALT in the past, it's been a theme the past several years that content is king. So the big distributors are trying to lock down content. And if you're if they themselves are articulating it could damage consumers, that's a tough place to start.
But, it's not just content, though. I mean, Time Warner has content with its HBO and all of its content divisions, but they also do my phone.
Yes, yeah.
My cable.
Your internet.
My internet. So that's what I said earlier. Who's who? How do you know what's the content and what's distributed? I know how you feel about this, but Time Warner, is it a content player or is it distribution?
I think it's both. That's why I'm talking about spinning off DirecTV and Facebook. You're talking about putting this high fiber line across the ocean. They're getting into the same message right here, because how do you differentiate with Netflix buying content as well? And you know what might be interesting is the fact that the president's tweets could end up in court.
That's right. That's right.
As interference in the DOJ court case, right?
That's right.
Because politically, you have the president allegedly has interfered in the DOJ case with this, and that leads to your populist message of stop the big companies from harming the small American consumer.
That's right. That's right. I mean, look, again, from a big picture standpoint, markets have been focusing in general, and investors on the good side of Trump policies in terms of economic growth, deregulation, tax reform, and potentially infrastructure down the line. Although, when's the last time we talked about that? And the thing that a lot of market participants forget, including hedge funds, is that you have trade, right, which hasn't come up too much so far, but the NAFTA negotiations are still ongoing. That could be a slight detractor to growth. And assuming that there'll be no political intervention in big name merger deals is not a very thoughtful strategy.
You're a portfolio manager, but real money to work. What is your bet on this, whether this goes through or not?
Well, so the hedge fund community itself still has long positions, though obviously the conviction's gone down. Ourselves, we're not taking a view. There are plenty of other things to do that you don't need to get involved in a position like this.
So tell us, what are you doing? Go ahead.
So big picture, though, looking at this, is this going to change the way people are starting to look at M&A in general? I mean, we're late in the cycle. We're seeing a lot of M&A activity. Is the fact that the Justice Department's intervening going to get others who are thinking of merging in other industries to just back off?
So that's already happened. I mean, some of the ramifications of this is that risk premium have gone up. Spreads have widened in other large deals as investors reassess that probability. But back to Maria's point of what we are doing, if you think of what's happened here the past 4 weeks, you've had a major push for potential deregulation for the regional community banking system. You now have Quarles confirmed by the Senate. You now have Otting confirmed by the Senate. You have Jay Powell at the Fed. And Crapo came up with a plan that moves very fast and aggressively in deregulating regional community banks. Not too big to fail, not repealing the Volcker rule. And so we're very focused on regional community banks, particularly their credit quality, which should benefit from an economic expansion, a massive deregulatory wave, and also from tax reform if we get it.
Would you buy stocks right here? Or are you a seller?
We're not a seller. We'd say most investors should stick with their positioning. There's still more upside if we get positive progress on tax reform. But just be realistic that if tax reform stalls, if Rand Paul goes off on a tangent or McCain goes off on a tangent, there could be 2 to 3% downside going into the end of the year. We expect stocks to close strong at the end of the year if there's progress in tax reform, but if there's not, be ready for a 2 to 3% pullback.
Verizon and T-Mobile are both adding subscribers at a much greater rate than AT&T. Does AT&T need this deal?
Strategically, yes. I mean, you've seen that, the stock reaction or the price reaction of their stock says they need this deal. I mean, clearly, right?
Yeah. Yep.
They're a struggling company without it in the vertical
they need
integration.
Content.
Yeah, they need content.
Yeah.
Content's king.
Troy, good to see you.
Great to see you
Thank you so
again.
much. Troy Gayeski joining us there.